evening and welcome back for another video. Today we're going to do a news roundup and talk about my opinion on why the market has taken a sudden slump. Yesterday it was around, I think, 136 billion. We're $14 billion down today, and that's the fabulous life of cryptocurrency and being involved in cryptocurrency. So as you can see, most of the coins are down from around 8 to 15%. Obviously, stable coins Tether and USD coin, True USD obviously up. People just throwing the money into there, waiting for a upswing. What's the biggest losses today? We have Nexo, which I believe is a loan platform, down 19%, and nothing too bad for the usual. Neo down 16, possibly a buy for that, with some good news coming out from Russia, which I did hear today. IOTA again massively down. It had some good upswing from some good news from some partnerships, and as usual, possibly Bitcoin is bringing down the market. So what's happened in the last 24 hours? The first thing I'll look at is nope, this article. Yes, this article. So newsflash, Dow flips green, or stock market extend winning streak. Now, obviously, we've been talking about the correlation between crypto markets and traditional markets. There's one article mentioning there's a 0.8 gap or difference between the two. When one flips, the other one will also flip. But I've been speaking to some trading friends today and people who work in equities, and just understanding, TA, technical analysis. And I'm not really spoken about it on this video because I don't like to spend too much time on technical analysis. But for anyone who doesn't understand or has heard videos talking about TA and what it means, so there are two types of general traders. You have traditional traders and you have technical traders. Traditional traders will look at news in terms of what's going on in the market, what's coming up, what's happening currently, what economic issues are there. For example, we'll take oil and we'll look at sanctions in Iran or sanctions lifted in Iran. We've got OPEC prices, you've got actual quantity of crude oil left in the world, you've got weathering, and those sort of things. If we relay that to crypto, we'll look at new projects coming up, partnerships, regulations, what governments are doing, and the finance in general. So probably like real world news, whereas technical traders will not look at this. They will literally look at its breaking points and resistance. So obviously we'll look at this chart. I'll start with this one. Look at this chart, and it will look at 8% drops, and it'll just look at candlesticks for this is Bitcoin to USD, and literally all technical traders will do will be either sit at home or sit in a company somewhere on the trade floor and look at its peaks and its troughs and calculate with line graphs what the resistance points are and what the breakout points are. And obviously we spoke about resistance. The breakout point for Bitcoin was going to be around $4,200, which I think you can roughly see around. It would be about here, I think, where it was. And then they will just monitor this, and they won't take into consideration any news, any sort of historical events, anything coming up. They'll literally look at the resistance and the breakouts, and they will make their assumption on literally just looking at charts and they'll do a buy or sell order on whichever it's going to be. And without getting much more information about why the market is dropping, it might have been that technical analysis shows that it was either going to be a breakout of the 4,000 area we were stuck at, or fall below the resistance, which was around 4,000 or 3,900, 3,800. And exactly what's happened, we've just broke that resistance and gone down. And obviously, when you're looking at the Bitcoin charts or just any crypto charts, you can just see, if we take a bit of an in-depth look at it, what's this? Yep, here we go. If we just look at is this today? If we just look at today only, there's 4,051, and then we've broken resistance of around where it was staying stable. If we look at 7 days, it may be more obvious. So yeah, there was the last, from the 6th of Jan until the 10th, so 4 days. And he had built up this nice resistance here, which I guess at its lowest point was just over the $4,000, and it was not sort of breaking that resistance barrier. And then all of a sudden, there, bang, straight down, completely down to 3,800. Broke another resistance there, and then, which was, I think, started from around here, 3,800, 3,000. Broke another resistance and bang, down to 3,600. It seems like a lot more people, a lot more individuals and trading firms who are actually looking at cryptocurrency are starting to trade on this technical analysis and using quants, so almost algorithms and programs to predict price swings without emotion. So no emotion in looking at trading. They're not sitting there, the way I see it, they're not sitting there eagerly rubbing their fingers, hoping, making Bitcoin go down, crypto go down. It's more the case of the market is swinging that way, and majority of technical analysis will go with the same answer, and that was to do a sell. Now, this is obviously information I've spoken to a couple of trading friends about. It's not gospel, and obviously it makes sense to me understanding how the market works, because if you look at the last couple of weeks, if you look at the good news we're getting, if you put the back delay to one side, and it's nothing to do with back themselves, it's just a government shutdown. But the other good news we've had with Ethereum and Constantinople, we've had XRP or Ripple coming out with their partnerships and talking about whether they're going to get, once they get to 200, or the fact they're going to nearly at 200 partnerships for banks, they're going to start releasing names. And I believe they've released names of banks they're partnering up with, and we've got some Japanese banks, we've got some Middle Eastern banks like a Bank of Kuwait and a bank in Bahrain and stuff like that. And so, who are said, yep, we're going to start using XRapid this year, and it's all going to go ahead, and testing has been great, or UAT has been great, so we're going to move forward with this. And then you got news from IOTA and things like that. So it's clearly nothing to do with traditional trading and what news is. The crypto market is really, news-wise, booming. It's fantastic. We're doing very, very well. It's only the second week of Jan, and you've already had such great news about cryptocurrency and projects and things like that. So, there's really only a couple of things pushing it down. One is just technical analysis pushing it down and traders like that. And the other one, unfortunately, is probably price suppressing. Now, if there are major whales holding on to certain currencies in the crypto market, and they're just either selling out and pushing it back into traditional markets, moving it to gold, or purposely pushing the price down to again buy up more cryptocurrency because they know something imminent is coming. Now, of course, these are just speculations in terms of what is actually going on, and generally with the crypto market, what I found over the last few years, a couple of years ago, you would see a market drop and you know exactly what's happened because so and so says something negatively about Bitcoin, or this person has sold this much and they've said this. But nowadays it's becoming a bit more, I feel, traditional, where you have to wait a couple of days to actually realize oh, it happened because there was this attack and only this many people knew about it, and the information slowly leaked out. So not a great day. I mean, there's been there. I would like to even think there was a bit of I think there was a slight recovery on the actual 24-hour volume. If you look at the market as a whole, as opposed to just Bitcoin, I think there might have been some sort of recovery. Let's just go to 1 day. No, so it's nothing. Unfortunately, well, yeah, really, it gained back 1 billion, but lost. Oh, well, we're at 138. So we gained 1 billion, lost about 16 billion. So yeah, I mean, we seem to go forward 8 billion and lose 10, and go forward 12 and lose 14. So not the best of news at the moment, but I guess the way I look at it as a positive is any currencies you are holding in terms of the ones you wanted to buy more into, possibly there's your buys right there. And obviously, again, not financial advice, please do your own research, but coins like EOS has dropped 15% and are sitting at $2.40 now. Potentially I would be looking at buying some more EOS. Bitcoin is obviously always, I believe, a good strong buy. Ripple's dropped 10%, so another good buy. So, and then for anything down the line where you're looking at coins which were slightly overpriced, or you thought were overpriced, maybe a good buy. So Neo, some good news coming up about Neo, sitting at $7. I don't want to spend too much time talking about the market, in a negative sense, but trying to think positive about what we've got coming up in the next couple of months. 16th of Jan, Constantinople. Hopefully, if we can get backed in by sometime in Feb now, depending on how long the shutdown is going on for, that should give us some. The way I see it is, if backed is not going to save us, then it'll be interesting what can. Because let's hopefully back goes ahead as planned in terms of 1 week delay or 2 week delay. If we don't start seeing recoveries or an upswing in the price, then something is seriously wrong with the market, or the people's purposely suppressing the price of the markets. And whether they know something that we don't know, and generally at the moment it's starting to swing that way, where big whales like a Winklevoss twins or the Tim Drapers or research analysts such as Tom Lee know something, or imminently know there's something going to be pushed out, or a company's going to come out and say, yep, we accept Bitcoin now, or we accept XRP now. I don't know. So please look at your coins you have, evaluate what you're going to do with your money. As usual, not touching anything, and we'll only ever buy more. This market is going to be, it will revolutionize what we do. Now, it may take some time to knock people off the purchase who are traditional finance, like Swift, like Visa. It's going to happen. And whether it's going to be Bitcoin or XRP or Ethereum, which was going to do it, it's going to happen. You can't have a system better than a crypto blockchain where you've got complete integrity, complete transparency, if that's what they want, and you can't defraud a system like a blockchain of Bitcoin. So it's going to work. It's just we're getting resistance from certain places, but we don't give up. We'll continue. People who bought will hold. We had last year a lot of weak hands which were selling off at earlier prices, who couldn't handle the market. People asking me recently, should I keep my Bitcoin? Should I sell? If it goes to 20,000, I'm going to sell. My advice was, don't sell at 20,000. You'll be selling yourself short. We know prices are going to go back up. We obviously don't know when. Nobody knows that. But as long as the good news continues to come through, the tide will turn. The bulls will inevitably come back, and any sort of selling points will be squeezed out, and those people will be squeezed out, and their sells will become buys. So my advice: hold on. It's already lower than last year. $20,000 to 3,600. Always a good time to buy. So please, in my opinion, personally, in my opinion, hold. If you really, really, really have to sell, then I would sell. Otherwise, lock it away. Don't look at it. If you're that stressed out, don't look at crypto for a few days, and most likely in a few days there'll be some greens. Again, historically, January is not a great month for cryptocurrency. Their losses have been around 48% in January of the last 4 years. I've actually even shown a chart of that, or a table of that, in a previous video. If I haven't, then I'll try and dig up the article about that. Remember, people don't really buy; they normally sell in January, especially after Christmas. So, yes, don't want to spend too much time on that, but I'll move on. So, something I've not spoken about this on this channel, which I have to do a whole separate video about it, because I've only just recently understood a new protocol called Mimblewimble. But for anybody who's read about this, or watched videos about this, or downloaded the Beam wallet, please look at this article. I'll link it in the description. Beam announces critical vulnerability in Mimblewimble crypto wallet. So the team behind Beam, a newly released privacy-oriented cryptocurrency, announced Wednesday that a critical vulnerability has been discovered in its wallet. So the vulnerability affects all previously released Beam wallets, both desktops and CLI. Do not delete the database or any of your wallet data. The vulnerability does not affect wallet data, secret keys, or passwords. So you don't need to delete your DB files like it would be on the Bitcoin Core, but basically your database files, or your private keys. Just delete the app. So on a Mac, it's very simple. You just delete, drag it into the wallet. You drag it into the trash and delete, and download a new one. On Windows is probably an uninstalled client. I don't want to spend too much time on this, but there's obviously a vulnerability. But to fix it, just delete it, download a new version, and continue on building up your ledger for this, and hopefully mine. But I will do a whole video near the time of release of the other Mimblewimble protocol, which is Grin, which is the 15th of January, and I'll do a kind of a in-depth look at what they both are, and how to download them, and how to mine. So yes, let's move on. The last article I want to look at was something which caught my eye, about a currency which I've not really spoken too much about, and it's a privacy coin, Dash. And the article reads: single wallet owner possesses 51% of the hash rate. So slightly concerning. So basically, the article reads, and I will read: Dash has a total of almost 1,900 terahashes per second at the time of writing. Meanwhile, nicehash, which is actually a cloud mining company, is responsible for more than 1,000 terahash across 25,000 miners. So, it's we're trying to be decentralized here, and we've got a cryptocurrency cloud-based mining company which has more than 51% of the power. Now, this is not necessarily scary news like we've had from Ethereum Classic with a proper hack, but we need to be careful again of the cryptocurrency projects we're involved in terms of what's happening to our money. So, sorry, that was just a bottle. it goes on to write, this particular transaction has 3 of the 4 top addresses as inputs, meaning one entity controls all 3. These 3 alone gather 53% or more. You can also see from the 6 months ago, around September last year, I think the 4th unknown pool also belongs to this entity, yet to be separated on the blockchain. It started to gather a lot of hash at the same time. So there's 3 addresses here, and I'll link the article below, and possibly you can look at these addresses in terms of the ledger information. Combined, these addresses have mined 26,665 dash to date at the time of writing. That is a total of 573 BTC or $2.2 million at current prices. Yikes. Yet the financial aspects is least of anyone's worries. 51% attacks create significant security liabilities in decentralized blockchain networks. Charlie Lee recently said that networks must be vulnerable to 51% attacks for decentralization. Minor centralization threatens networks as well. However, so the Reddit user Flenist concludes his post. So it is possible someone could try to perform a 51% before Dash implements their chain locks. The actor could start straight away. Anyone offering a service with Dash must keep an eye on the chain as long as this doesn't change, and be very careful. He's referring to a recent announcement by the Dash development team that are working on something called chain locks. In November, Dash said they're introducing the new feature in order to combat 51% attacks. Such attacks are news again with recent issues surrounding ETH. Chainlocks also deals with block recognitions and modifies the longest chain rule that Dash inherits from Bitcoin. I think Dash was a fork from, I think, Bitcoin, which is called Darkcoin originally. So again, a currency which is fairly high on the, I think it's 12th on the coin market cap. Obviously, it's good that they're looking to implement something. Hopefully, they can get this implemented before such attack. I personally don't think there'll be an attack. Nicehash is a fairly reputable company or cloud mining company, and it would have to take a lot for 25,000 miners to come together and take the, they'd all have to be on the same page basically. Similarly with Bitmain and their sort of hash rate of Bitcoin, although it's all based in China, and everyone gets worried when you mention the word China, they're spread amongst so many different miners. So it's not scary news like it is with a proper attack. It's just the fact that we've got one company who has 51% of the hash rate, which in a decentralized world is very much centralized. So hopefully Dash can get this together and prevent any further attacks, as in terms of having any further attacks, or having attack control, I should say. Obviously they're doing quite well in Venezuela or South American countries with their currency, which is very high on inflation, about 1,000,000%. So it's not negative news, but again, going back to just knowing where your money is and understanding and looking at articles. So I'll round it up for today. I'm sorry I couldn't really find any great news at the moment, but hey, this is the crypto world, and we know what we got ourselves into. And I know tomorrow or the day after that or Monday, there'll be some positive news in the market in terms of the pricing. There's plenty of good news out there, and keep positive, keep holding, and I'll see you guys on the next video. Goodbye, everybody.